Hi, I'm Chris Days and I'm the founder of GoMortgage, and I've spent over 22 years helping homeowners across the UK buy their dream home, even if they thought it wasn't possible. At GoMortgage, we keep mortgages jargon-free, simple, and totally tailored to you. Whether you're a first-time buyer, have bad credit, and self-employed, or just generally want to know how things work, we're here to guide you from scrolling Rightmove to getting your keys. I'll be sharing real client stories, insider tips, giving you straight talking advice, no fluff, no nonsense, just what you actually need to know. If that sounds like your kind of mortgage advice, hit subscribe, drop me a thumbs up, and let's get things moving. Why is it important to check your credit file? So it's important for a number of reasons, and the type of credit report is also important, which I'll come on to. When you're getting a mortgage, one of the main things that the lender is going to look at to see if they should lend you money is your credit file, to ensure that you conduct yourself properly with any credit that you've currently got, and to make sure that there isn't anything such as missed payments or defaults or CCJs, because they're going to basically determine the lender you can go to. So any issues historically with your credit file could potentially mean you need a bigger deposit or you're going to have to pay a higher interest rate. The type of credit report that we look at is also important. So when you're looking at things such as ClearScore or Credit Karma, that's fine for keeping a general overview, but we use a multi-agency report called Checkmyfile. The reason we do this is because it's checking Experian, Equifax, and TransUnion. So it's checking the three main agencies that the lenders are going to use. Nowadays, the lenders are using more than one. So it's important that we're seeing a full picture of your credit history. If you're just looking at ClearScore and they're just looking at Experian, there could be things on Equifax and TransUnion that are hidden from you. So it's really important to have a really good overview of your full credit report. How does credit score affect getting a mortgage in the UK? Well, it's one of the big factors that lenders look at when you are getting a mortgage. The three things that they're going to look at really is the size of your deposit, your income for affordability, and your credit history. Obviously, there's other things that they look at, but they're the three key points. So credit history wise, if you've got no issues with your credit file and you've got a great credit score, you're going to have access to pretty much every lender. You're going to be able to put less of a deposit down if you wanted to. Whereas if you've got issues with your credit file, whether it's just a missed payment, could be CCJs, defaults, debt management plans, these are all things that are going to affect your credit score. And in turn, it might mean that you need a bigger deposit. It might mean that you're going to have to pay a higher interest rate. And the amount of lenders that you might have access to might go from 100 down to 15 or 20. So credit score has a big impact on what you can do mortgage-wise in the UK. How to avoid damaging your credit file or credit score when you are getting a decision in principle. First of all, I would say use somebody who is experienced, who knows where to place the case. By going to somebody who doesn't really know what they're doing or is inexperienced, they may have to do multiple searches with multiple lenders because they don't know what the criteria is like. And this potentially could have a knock-on effect on your credit score because it's having lots of different credit searches. Typically at Go Mortgage, we will use a lender that does a soft search, which has no impact on your credit file. Occasionally, we might have to use a lender that does a hard search, but we would advise you of that before it's done. And typically, we know that the lender that we're going to be going to is going to accept the case. Occasionally, we might have to have more than one done, but that is very rarely. So typically, we go to one lender, a DIP will get accepted, it's a soft search, and it'll have zero impact on your credit file. If you're young, and I would say sort of 18 to early 20s, and you're thinking about getting a mortgage in the future, it's really important to start thinking about your credit score and your credit file. In the past, a lot of the older generations will say avoid credit, don't get things on credit, but that's not going to help you when it comes to your credit score and building your credit file up. What you need to do is build that history, and the only way you're going to do that is by getting credit and using it wisely. So maybe get a small credit card, put your fuel on the credit card, but pay it off every week or every month. Don't get into trouble by overspending and maxing out your credit card. Use it wisely, but that's going to build your credit score up. Same with things like a mobile phone. Get a mobile phone on credit, it's going to build your credit score up in the background. By doing little things like this and making sure that you're on the voters roll, making sure that you don't miss any payments and things are set from direct debit, that's going to build your credit file up, build your credit score up, and then in turn, when you come to get a mortgage, you're going to be in a much better position. Can you get a mortgage if you're a joint applicant, or there's two applicants, And one of you's got a good credit file, one of you's got a bad credit file. The answer is yes. Unfortunately, though, the lender is going to look at the worst common denominator. So if one of you's got a perfect credit score and one of you's got a colourful credit score, then the lender's going to look at the person with the adverse credit. That's going to determine the lender that you go to, the size of your deposit, even the interest rate. So the person with a good credit score doesn't make the person with a bad credit scores better. They're looking at the worst common denominator. Can you get a mortgage if you are in an active IVA? The answer is no. Currently, there are no mortgage lenders that will look at somebody who is in an active IVA. Once the IVA is satisfied and you've got your completion certificate, there are limited lenders that will look at you, providing you've got a big enough deposit, which typically is around 25 to 30%. When it comes to high street lenders, they're going to probably want to see a good 3 to 6 years after the IVA has been satisfied before they will look at you. However, there are specialist lenders that will look at you the day after you've got your completion certificate. If you need help looking at your mortgage, drop me a message. If you found this helpful, hit like and subscribe and share this video with someone who's looking to buy their next property.